Good afternoon, everyone. Welcome to the webinar organized by MS Accounting and Tax Consultancy on the topic Ecotense, Insights about the Economic Substance Regulations. First, I would like to inform you about few rules of the webinar. Rule number 1, audios will be turned off for the attendees, that is by default. Second, if you wish to ask a question, you can drop it in the Q&A tab and those will be taken up at the end of the session. Third, in order to make the session interactive and to know about your understanding, we'll be having polls in between the topics so that you can vote on the basis of your judgment. Moving forward, I would like to introduce my firm. MS Accounting and Tax Consultancy offers a wide variety of services like accounting, bookkeeping, value-added tax services, transfer pricing, country-by-country reporting, ESR filing, US expat taxes, as well as other taxation services to its clients. As an organization, MSATC strives for excellence by providing quality services in accordance with the requirements of different entities, as we understand that each of them is different from one another. Hence, our services are custom made according to their needs. Now, as for the speakers, I'm honored to introduce our first speaker, CA Mohammed Shafiq, Managing Partner of MS Accounting and Tax Consultancy. He's a chartered accountant and an approved tax advisor with an extensive expertise in taxation and laws of the UAE. In the years of his practice, he has had the opportunity to closely work with the major MNEs and the royal family businesses. He frequently speaks at events and webinars and has written articles for different publications. He has won prestigious awards of Best Tax Advisor by Global Advisory Expert. As for our second speaker, she is CA Nabila Banu, Team Lead at MS Accounting and Tax Consultancy. She is also a chartered accountant. She has demonstrated her excellence in delivering the best client-oriented services in the field of accountancy, audit procedures, tax, best practices, and specialized consultancy services. She is also a public speaker and a writer who has served as the vice chairperson and editor in the Chief of Students Association at Institute of Chartered Accountants of India. Moving on, I would like to hand over the space to Mohammed Shafiq to begin the session. Over to you, sir.
Thank you so much, Johanna. Thank you for the wonderful introduction. So, just to begin, just to reflect on the name itself, economic substance regulation, there was no definition of economic substance in any country 6 or 7 years back. There was not formal regulation which defined it. Now we are in a position where we not only have a regulation, but we need to satisfactorily abide by it. So it's like a pledge all the countries has taken. I'll try to spend next 30 minutes, 30 to 40 minutes to explain the concept to be more clear. I'll not be concentrating on what's happening more importantly, but why it's happening, because we have attendees joining across the globe. We have people joining from, what I've been informed is that from Australia, Hong Kong, US, India. So we have attendees across the globe. So I wanted to really concentrate why it's happening, why the change in the landscape and the region. That it's more of my topic today. Of course, we'll be touching upon economic substance regulation. I have a fellow speaker, CA Nabila, who will also be touching on the economic substance requirement, tests, due dates and all. But more strategically, the important key thing is why it's happening. So let's begin. Can we move to the next slide, please? Yeah. So back in 2010 and 11, there was growing public anger, and this were the headlines of the top international media, as if you can see. In spite of the fact that most of the countries were having a full-fledged tax regulation authorities, tax profiles, tax treaties, millions of dollars of annual tax revenue is being leaked through loopholes, or what we can say is creative tax planning, or I would like to say it's a cute tax planning. It's millions of dollars. I mean, back then in 2013, OECD estimated that 240 billion US dollar were lost annually due to tax avoidance by multinational companies, which is equivalent to 4 to 10% of the global corporate income tax revenue. International rules were allowing profits to be artificially yet legally shifted to low or no tax jurisdictions. So what we have to understand is that this profit shifting was not illegal means. It was through the rooted means or the legal means these profits were shifted. So can we move, just to put these things into perspective, can we move to the next slide, please? Okay, so these are just facts on what actually happened, and Vodafone said that Vodafone became the first company, a multinational company, to voluntarily publish country by country data in its financial statement back in 2016-17. And it shows that 40% of its profits are allocated to tax haven. Now we have another company called Amazon. Amazon paid just 16.5 million in tax on European revenue of 21.6 billion. So you make a revenue, you have a turnover in a country, but you eventually end up paying very less corporate tax, or the effective corporate tax is being very less in the countries where you make the revenue. The Facebook has done, the Google has done, the Starbucks has done. So I'm not just getting into the details of every countries or the companies that has avoided tax through the tax ideation. But my point here is that they have used different mechanisms to avoid tax, different mechanisms to erode the base and shift the profits. And just a key thing, and just to put this again into perspective, overall, multinationals in a high tax jurisdiction are estimated to pay 30% less tax. At the very least, a total of $8.7 trillion remains hidden offshore, which is equal to 11.5% of global wealth. It's not the small figures we are talking about. There is another example like Silicon 6, where the top 6 companies in the US, they pay effective tax when they were like 35% of corporate tax. They pay around 5%. Like the Facebook paid just 10.2%, Amazon paid 12.7%, Apple paid 17.1%. So it's just a single digit or 2 digits, which is far less than the effective corporate tax at that point of time. So it's very simple that these companies were trying to shift their base and not being taxed in the country in which they were generating the revenue. So let's move on to the next. So this findings, or this how these companies have done, it's not something which is very new. Okay, so OECD, Organization for Economic Cooperation and Development, came up and said, guys, folks, this is not something new. You were just going out in the public in 2010 or 11. This is not something which we didn't know that. We have already reported this back in 1998, if you take the report, which reported on harmful tax competition. OECD has identified 4 key or major reasons why this was happening. So the first thing is that no or nominal taxations. We call it NOON, or it's just known countries. What does that say? Is that you don't have a corporate tax, and that's the means of attracting a foreign capital. So this is one of the reasons. The other reason is lack of effective exchange of information. So if you take UAE as an example, recently we had, back in 3 years, bank introduced common reporting standards. Even that had come philosophy of common reporting standard. The idea is US came up with a FATCA for US-driven tax residents, and the European Union said, we also have to come up with something which is equally intelligent. And that's being implemented here. So that's the KYC, we call it. So everything get reported on a common platform. So whatever we report here in terms of the tax or in any jurisdiction for that matter was not comprehended in any other jurisdictions. So there is a lack of effective exchange of information, lack of transparency. There's a recent, in 2014, this called LEASE leak. There was a scandal based on one of the big fours. The data has been leaked. And this is that they were giving a comfort letters to major corporations to avoid tax. So whatever is being taken as tax reforms or the tax policies in the country jurisdictions were not being, it's not crystal clear. It was like the transparency was completely lacking. And finally, the thing is the absence of substantial activity. You create a shell company, you create just any form of company, and you just roll the base and avoid the tax. So this were just said in OECD back in 1998. So the people were just, the whole thing came into the public, and the public was, and by and large, was growing against protesting against the tax avoidance. Like late in 2010-11, this is the kind of development that took place. So. So can we move to next slide? I think we have a poll question now, just to, Shahana, can you just do the poll just to make it more interactive and to get the idea on what's your understanding on the tax currently in UAE? The question is, does UAE have corporate tax? The answers are yes, no, yes, but only for oil companies and foreign banks. So the attendees, if you can do the poll and then just submit the poll. Yeah. Shauna, if you have done the poll, you can broadcast the results. What's the feedback from the attendees? Yes, no. Okay, yeah, so great. It's a very good feedback. Yes, but only for oil companies and foreign banks. That's really good to know. Interesting. Okay. So okay. Now, as I said, OECD said that we know this back in 1998 itself. So what are we going to do now? Okay. So irrespective of the most of the countries having effective global tax rate closely 15-20%, there are detailed OECD materials, books and books, pages and pages of technical tax data, interpretations, VAT, corporate tax, advanced tax, withholding tax. They really understood that there's need of an overarching law to put in place, which supersedes the governance of how tax is collected. So OECD said, enough is enough. Okay, European Union approached OECD in another way. So OECD said, enough is enough. We think we are capable of having one legislation which is good enough for you all. If you need guidance, we give guidance. So OECD said, what OECD has come up with is a very catchy term, BEPS, base erosion profit shifting. What does that mean is erosion of tax base or shifting of economic profit by means of XYZ. That's the objective of BEPS. If you're relying on a foreign capital, each country must work on legislative framework which does not attempt or allow, consciously or unconsciously, any tax creative ideation. So the entire BEPS agenda is anti-tax avoidance measure, challenging the fact that if you are in this country, you're doing an X activity, then I expect you to give complete answer by giving for that X activity You need Y resources, and those Y resource has Z cost. And the story is good enough to satisfy my test. Whether it's economic substance or transfer pricing. Okay, so let's move on to the next slide. Okay, every legislation has its core audience, which it addresses to. These are the core audiences of BEPS. These are the taboo words in international taxation. The KPI of any tax professional working in any large or MNE is not going to be how much tax you have saved or are the compliance on time. They have to be now. No question on that. The question is how, even the question is not how low effective rate you can manage. The question is whatever solution you bring to the table, are they sustainable at the toppest of the top level? Have you considered the international tax best practices to the extent possible? Of course, to the extent required before taking a decision on an age-old formula or structure. That's the change BEPS initiative have brought. Let's move on to the next table slide, please. Okay, so this is the menu card of BEPS action plan. 15 action plan on 15 dedicated principles. There are, if you look at this form the genesis of entire transaction of international taxation. These perspectives are not new. We have been disclosing related party transaction forever in our financials. We have been disclosing tax provisions forever in our financials. But that information has not been comprehended from the lens of tax. Nobody ever thought that your balance sheet would be read today or tomorrow by a tax authority sitting in another jurisdiction. That's the bridge BEPS has created. Automatic exchange of information, commitments were given by most of the countries, which we would know as countries even existing on the globe. So it is a sovereign body and it can't get bigger than this. The OECD and G20 countries developed the BEPS package of action plans over the course of 2 years, and the main aspect of the package were finalized and delivered in 2015. Currently, 134 countries are part of this initiative, amounting to approximately 70% of the non-OECD countries. Non-OECD countries participate as associates, being on an equal footing with the OECD members of the framework. Can we move to the next slide? Okay. So European Union was, I would say, was more concerned on the tax avoidance. So what they propose is that they have come up with a code of conduct of business taxation in the code. And their concern was too much profit and with too little substance in a lower zero-rated tax jurisdictions. So they wanted every jurisdiction to have a fair tax principle, and it says that in the code of conduct, the jurisdiction should not facilitate offshore structures or arrangements aimed at attracting profits, which do not reflect real economic activity in the jurisdictions. So what is the action plan? The action plan was nothing but they thought that we have created this code of conduct. We wanted to scan or screen the entire jurisdictions to the extent possible, and let's name them. Like it's basically publish a list, and it's basically nothing but a name and shame of kind of thing. So can we move to the next slide?
So before moving to the next slide, we'll go for a poll right now.
Okay, fine, sure. Is UAE a part of the BEPS inclusive action plan? Okay, that's an interesting question. So I think we can give 15-20 seconds to the attendees to take part in this poll. Well, a very good answer. It's the perfect answer. Yes, UAE is part of BEPS Inclusive Action Plan, 100%. That's the right answer. Okay, so Sharana, thank you for sharing the screen. Can we move to next slide? Okay, so European Union said that I'm going to publish different kind of lists to ensure the compliance with their code of conduct. And the first list was published in 2017. And basically it had three kinds of lists: a black list, a gray list, and a white list. So yeah, where do UAE stands? That's an important question. Now you said that UAE is part of inclusive framework, then how it happened. So let's discuss on that. Can we move to next slide, please? Okay. In December 2017, when UAE was really preparing for VAT, the first kind of tax, I would say, indirect tax in the region, European Union came up with a list, so UAE had to abide with a certain. They committed to say that UAE was added to the European Union blacklist of tax haven in December 2017, and in Jan 2018, UAE committed to undertake certain tax reforms, and thus removed from the European Union blacklist and moved to the grey list. Since it's just a commitment, they have been moved from, they were pushed from blacklist to grey list. In May 2018, UAE said that, okay, I'll be happy to take part in the minimum web standard. So we'll be implementing as per minimum web standard action 5, 6, 13, and 14. We are committed to implement this action plan and commit for minimum standards. So what happened in December 2018? Just remember that, just fine, note that from May to December 2018, it's just hardly 6 to 7 months. And the UAE did not apply the BEPS minimum standard. And then they were just like removed in Jan 2019, and they were re-included in the blacklist. So it's not a span of 7 to 8 months. See the kind of pressure the countries or jurisdiction having to comply with the BEPS standard. It's being just illustrated here. So the UAE again, and the UAE enacted ESR and CBCR back in 2019. And in October 2019, UAE removed from the blacklist. So this is the kind of pressure the countries or jurisdictions are having. The important point here to note is that this were happening earlier. Like you were saying that OECD reported in 1998, they were growing public income. But this time it's very serious. That's the core thing. The compliance is being taken on a very serious note. And we see a lot of changes. And there are a lot of questions which I get usually is that, are you sure this is coming? And when we were talking about economic substance back in 2017, 18 and all, the people are just saying, are you sure this is coming? Because make no mistake, the commitment has been given in Jan 2018. But why there was a delay is that they wanted to bring all the stakeholders around the same table, ensure that the competitive advantage is not compromised. But for me, I believe this is a very big positive step for a country like UAE. Why? A similar jurisdiction like Cayman Island is having a geographical area of roughly 264 square kilometer with almost 100,000 people. BVI, 153 square kilometer with 40,000 people. Now think about UAE. UAE is with 83,600 square kilometer, close to 10 million people as of 2020 population. So with business, economic, technological infrastructure, labor force, qualified professionals, it would be easy for business to have and prove economic substance, and hence attracting new business would be less challenging, unlike other tax jurisdiction for UAE, because UAE is a real economy. Can we move to the next slide, please? Okay, so these are the global footprint of ESR. If there was ever a philosophy of going global, tax is a sector which has truly gone global. Every country dealing with tax collection, securing its own tax revenue, at the same time, now they're collaborating with the world. For example, UAE itself has more than 100 double taxation avoidance agreements signed and more than 90 are enforced. I mean, UAE with no corporate tax, as you said in the poll, except for banking and oil. So the sustainability of existing structure or entity is being questioned now. So that's the change. The sanctity of your existence in UAE is being questioned for all the right reason, I must add. It is time to reinvent or realign with the biggest regulation 10 ever in international tax legislation. Those who are joining from other parts of the world, you may find this is something which you all knew it, but in this region, which is the tax is still something which is very new. I would say it's not a mature tax jurisdiction. So tax is not an incentive anymore. What I understand is the stability is the key. The entire tax landscape is changing. The entire footprint is changing. The tax authority is not just concerned about your expenses, your withholding taxes, advance tax. I'm not here as a tax professional to define how you should run your business. That's the tax regulating authority coming up and saying, you know your business very well. It is your honest and responsibility to explain me your activity level, your cost structure, your resources. Please explain to me so that I'm convinced. That explanation itself is what is economic substance, country by country reporting explanation. So this is the underlying undercurrent. That's the whole idea. That's the big picture, I would say. Okay. Can we move to the next slide? I think we have a poll here as well, right? Okay. So this is the question. Economic substance regulation is applicable to free zone entities, mainland entities, offshore companies, all mentioned above. So do you have any idea on this, attendees? Who all are subject to economic substance regulation? Wow. Okay, that's quite interesting results. It's free zone entities and mainland entities. Free zone entities is 50%. Mainland entities is 17%. It's again interesting to see that nobody have chosen offshore entities. All mentioned above 33%. Okay. So this poll question definitely is one of the major questions we always get. The people are really confused in UAE, in which because most of the regulating authorities in free zones are chasing the or sending the reminders to the licensing holders and saying that this you have to comply with ESR. So they think that it's applicable to them alone. We'll find out for whom this is applicable. Okay, so just wanted to add, this is the current blacklist of European Union, and this can get changed. Let's move on to next slide. Okay, now who is subject to economic substance regulation? So we just framed 3 questions now, and based on this, we should be in a position to understand whether any entities of the business is subject to economic substance regulation. The first question is, do you have a license? You have a permit to do a business here. or represent your office, whatever kind. So do you have a licensee? Are you a person with a trade license or permit issued by any regulatory authority, whether it's a free zone, whether it's a mainland, any regulatory authority? Are you having a license or a permit? If yes, let's move on to the next question. Are you conducting a relevant activity? So what is relevant activity? We shall discuss in some time. So the question is, if the answer to the permit is yes, are you conducting a relevant activity? If the answer is yes, move on to the next. Are you earning any income from the relevant activity? If your answer for all this is yes, you are in the scope of economic substance regulation. Okay, so now let's find out. So the point here to be noted is that whether you're a mainland company, you got approval from Department of Economic Development, Ministry of Economy, or you are in a free zone, a financially free zone, any other free zones, or offshore structure, whatever you are, irrespective where you have incorporated, this is applicable. Okay, so let's move on to the next slide.
Before that, sir, let's have a poll related to this topic.
Okay, fine. To assess. Oh, wow, interesting. Okay. To assess if the activities of your entity falls under the category of relevant activity, you have to find the relevant activities from your trade license or commercial license, or go beyond the trade license and assess the actual substance or nature of the activities. Okay. It's an interesting question. Let's see the results. Okay. So it's more than 50% is saying that you have to see your trade license. Okay, that's interesting. Okay. So how do you identify are you conducting a relevant activity or not? So the thing is that we need to see the substance of the form. What have I mentioned in the trade license? It's not the end. You have to dig in detail. You have to find out whether you're doing any other relevant activities. You have to find that out. It's not just whatever mentioned in the trade license. That would be accepted by the regulatory authority as the conducting of relevant activity. Because this is very key here, as most of the trade license in UAE will not be representing the whole activity undertaken by that business. So it's very important to know that even if you're a family business, you may have in the trade license, it's a family business, but you might be doing the investment. You might be in the investment fund management business. You may be a holding company. This all comes under the relevant activity. So it's irrespective of what's mentioned in your permit. It's important to dig into more details and identify and do a multi-level analysis to identify whether you are doing a relevant activity or not. Okay, so can we move to next slide, please? Okay, so I'm basically trying to explain the relevant activities here. Okay. The first relevant activity is shipping business. So to undertake a shipping business, a licensee must operate one or more ships in international traffic. So what I do is there are 9 relevant activities. I'll not be touching upon all the 9 relevant activities in detail. There are the complexity, the intricacies of each relevant activity differs, and we need to have an in-depth analysis or assessment before commenting on the applicability. So I'll just touch upon and based on the questions we have received so far, in implementing economic substance regulation, I'll identify certain points and we'll just also disclose that key points to be noted during my explanation. So the important thing in shipping business, what we have to see is that the licensee must operate one or more ships in international traffic. The thing is that it should not be domestic, it should be international. And the definition of ship for the purpose of the regulation does not include vessels used for fishing. If it's a small vessels, like which does not more than 10 tonnage of capacity, and the leisure vessels will not also be considered as a ship. And the point here to note is that to fall in the ambit of economic substance regulation, it should be the ship should be operated, not just owned. Now let's take an example here. Charter LLC, it's a company in UAE which owns a ship, and that is chartered to Cargo LLC. And Cargo LLC is the operator of the ship. So who falls under the ambit of economic substance regulation is the Cargo LLC, not Chartered LLC. So mere ownership is not the criteria. Who operates the ship is the criteria. Let's explain next relevant activity. Can we move to next slide, please? Okay, headquarter business. A license regards carrying on a headquarter business if the licensee provides services to a foreign group companies. And through the provision of such services, there are two conditions which we need to see. The licensee takes on the responsibility for the overall success of the group, or the licensee is responsible for an important aspect of the overall group's performance. What does that mean? I'll just try to simplify that. But before that, what is considered as a headquarters service is that the provision of senior management, the assumption or control of material risk for activities carried out by a foreign group companies, or substantive advice in relation to the assumption or control of such risk. So let's take a practical example where I will try to explain and simplify it. There is ACO, it's a company incorporated in UAE, which provides management services to a group company abroad other than the UAE. And the income is received by ACO. And ACO is responsible for the performance of the group companies. Then such kind of management services definitely falls under the ambit of headquarter business. But again, one point to be noted here is that a licensee's position in group's corporate structure is not relevant for determining whether it is engaged in a headquarter business or not. Meaning, the licensee need not to be a direct or ultimate parent of a group company for it to be considered as a headquarter business. Whatever your structure is, you can be a branch here still providing headquarter services. So we need to do an in-depth analysis. So the regulation mentions the following figure. Core income generating activities for a headquarter business, that is taking relevant management decision, incurring operating expenditure on behalf of the group entities, coordinating group activities. So that's the headquarter business. Let's move on to the next. Okay, it's pretty much a clear and highly regulated business. It's an insurance business. Insurance business, a UAE business that carries on an insurance business would be regulated either by UAE Insurance Authority, or if it's there in DIFC by DFSA, or if it's incorporated in the ADGM, it would be FSRA. It is pretty much highly regulated industry, and it's pretty straightforward. So the core income generating activities are listed here. So one point I wanted to add is that based on the lot of questions we frequently receive, I just want to clarify that insurance brokers, agents, and other businesses which provides insurance related support services that do not involve assuming that they do not take all or some of the insured risk, they do not fall within the definition of insurance business, although they may conduct activities that fall in other relevant activities. So that needs to be analyzed. But if they provide ancillary support services to their foreign connected persons or branch, they definitely do not fall in the ambit of insurance relevant activity. Okay, let's move on to the next slide. Investment fund management business. Okay, so the definition of an investment fund management business definitely encompasses licenses that provide discretionary investment management services It can be in relation to domestic funds or a foreign investment fund. I wanted to just stress on the word. It should be discretionary investment management services. So, discretionary investment fund management services include making the investment risk related to decision on behalf of investment fund. I just want to clarify one point again based on our experience in the user implementation of the customer received. The clarity has been there that the investment fund itself, it's not considered as investment fund management business. Unless it is a self-managed fund, the investment manager and the investment fund are part of the same entity, yes, they do fall under the ambit of ESR. Otherwise, the investment fund itself is not considered as an investment fund management business. Taking decision on holding and selling of investment, I will be not touching on all core income generating activity, but just wanted to add one key point here that a licensee that is merely implementing decision of another entity with respect to the holding and selling of investment without independent evaluation or a study before taking steps or decisions to affect the investment or divestment, they do not perform the core income generating activity, and of course they will not be falling under the ambit of ESR. Let's take a practical example here. Now we have an investment fund and which is structured as A LLC, and the investment fund has been A LLC entrusted B LLC to manage the fund of A LLC, and B LLC again delegated the administration to C LLC. So who falls under the ambit of investment fund management business? It is B LLC. As I said, the investment fund itself will not fall under the ambit. So A LLC is not falling under the ambit of investment fund management business. When the C LLC, which is just purely an administrator, they do not take any decision, they just do the back-end work. They also do not fall under the ambit. So B LLC have to comply with the economic substance regulations. Yeah. Can we move to the next slide, please? Okay, it's a holding company, a holding structure. This is, I would say, it's very common in UAE, and it's important to note that it's widely seen as structure in UAE. A holding company business is defined under Article 1 of the regulation as a business that is a holding company in accordance with the law applicable to the licensee carrying out such activity. What does that mean? It has its primary function as the acquisition and holding of shares or equitable interest in other companies. And one more clarity here is that if it does not carry any other commercial activity, then only it falls under the definition of holding company. I just wanted to make it simple that if you just have equitable interest and plus you also do a business, like for example, a holding company, A company, let's call it A company, and they hold the shares in B company. So they hold the shares in a B company, plus they themselves are engaged in the business like manufacturing. In that case, they are not considered as a holding company for the purpose of economic substance regulations. And that's been explained here in this illustration. All right, and just to note that the holding, if you're a holding company, under the ambit of ESR, you have to follow a light substance requirement. You don't have to fulfill the entire substance requirement. You have a light economic substance requirement. And what is light and what is the, I would say, heavy. This would be explained by my fellow speaker during her session. So let's move on to next. Okay, this is lease finance. And it's very interesting, actually. The definition of lease finance business encompasses a licensee that offer credit or a financing for any kind of consideration, and includes, more importantly, any intra-group financing. So you may say that we are part of a multinational enterprise, or we have different entities here in UAE, and you may lend loan, provide loan to subsidiary or shareholders, and that you earn something from that. You generate revenue. It can be interest, loan, and you generate income from that. In that case, also you fall under the lease finance relevant activity. That's very important here. Um, because they think that when most of the business here have the confusion that whether they will be under the ambit or not. Yes, they are under the ambit of lease finance as long as they generate any income. Now let's move on to next. Okay, this is again very relevant, important or relevant activity. Why I would say is that this distribution service center, it refers to two different activities that are covered under one relevant activity. Okay, it is distribution and service center. So two things are involved. The first thing, let's take the illustration itself. You purchase certain goods. You as a business purchase certain goods from a related co. So the condition is that it should be purchased from a foreign connected person, and you distribute that to overseas to any third party. You fall under the ambit of economic substance regulations. But in terms of services, you are related, you are in UAE, and you provide these services to your foreign connected person. For the business not in UAE, you also fall under the economic substance regulations. So there are two things. It's the distribution of goods, and then the services. There are two relevant activities, two activities in one relevant activity. Meaning, if you purchase, to be in simple terms, if you purchase or procure goods from a related party from abroad and so sell that to a third party, then yes, you are under the ambit. Or you are a business here in UAE and provide services to a foreign connected person. Even if you don't add a margin, you don't have a markup. Even if it can be any consulting service or administrative service. If you provide that, then again you're also under the ambit of ESR. This is very crucial. Can we move to next slide? Yeah, banking. It's again, I would say like insurance. It's a highly regulated industry. It would be if it's a mainland banking company, it would be regulated by central bank. If it's an ADGM, FSRA, DFSA, if it's an DIFC. So these are the core income generating activities, which is there, which I don't want to read just out that. But again, the most common question we receive is that if an entity provides like a licensee that is part of a banking group and only provides advisory, arranging and other services to clients in the banking group, they generally do not be considered to conduct a banking business. That's one clarity I just wanted to give to my attendees. Next slide, please. Okay, high risk. This is the last relevant activity I wanted to see. So a UAE business regarded as carrying on an intellectual property business if it holds, exploits, receive gross income from intellectual property assets. An intellectual property asset can be a copyright, it can be patent, it can be a trademark, it can be a brand, technical know-how, from which the licensee earns a separately identifiable income in the form of royalties, licensee fee, franchisee fee, capital gains, or any other income from the sale or exploitation of the intellectual property assets. But I'm not going to go in detail, but one thing on the which is relevant to the UAE business, most UAE business will own some form of intellectual property assets. It can be a trademark, technical know-how, whatever it is, but they do not earn separately identifiable income from such assets. In that case, this relevant activity will not be applicable. Okay, and I just want to say there is high risk IP, which I want to spend next 1 minute on that. Is that the licensee did not create the intellectual property asset which it holds for the purpose of business, and the licensee acquired the IP asset from either a group company or in consideration for funding research and development by another entity. And what they do is they also have sold that IP asset to one or more group companies. If all these three conditions are satisfied, this falls under the high risk IP, which by automatically saying that if you conduct an high IP business relevant activity, you are considered as not complying with ESR. So those who are having IP, I would suggest to go in detail and identify whether they fall in the high IP risk or the just IP relevant activity, and do the needful at the earliest to comply with economic substance regulations. So I've been just trying to do a sprint on the relevant activities. As I said, I have not in detail discussed all the intricacies, but again, all the practical points I've been trying to address. Now let me hand over the space to my fellow speakers here, Nabila, to explain further this regard. Thank you.
Thank you, Shafiq sir, for the handover. Yeah.
There's one poll that I would like to launch. Can I move ahead?
Yeah, sure. So it is like, is there any threshold limit on the turnover of or your capital to fall under the legislation of economic substance regulations in UAE? So we have a yes or no answer. Let's see how the answer comes up. So we get to see some few yes. Yeah, so the country by country reporting and such other regulations that as UAE has seen has a thing like threshold that is like 3.15 billion. You have to cross that to come under that regulation. So the thing is that when it comes to economic substance regulation, the regulation is very silent about the threshold. Actually, it doesn't have anything got to do with the threshold. It goes with the fact that are you into relevant activity? If yes, then comply the regulations or the requirements that is required to be fulfilled. And we are not bothered about the threshold or your turnover or your the capital limit. So moving on to the slides. What are the requirements of economic substance requirement, or what is that test that we have to fulfill in order to come under the purview? The thing is that first thing is now that we have heard about the relevant activities and the core income generating activities that is coming under each relevant activity, why was it so important? Why was it being discussed in so detail? The requirements of economic substance test is that the core income generating activity that was just explained must be genuinely conducted in UAE. Another requirement is directed and managed in UAE. This is another field where we get to see a lot of doubts and questions. What will constitute directed and managed in UAE? And it is like this. One thing you have to be sure is adequate board meetings in the state. Adequate board meetings with the quorum of the directors physically present in the state. There should be written minutes signed by the directors present at that time. And those directors should have necessary knowledge and expertise to direct and manage your business. The minutes should also record strategic decisions taken in UAE. This is another very important requirement. And if you have a single manager, don't worry, but he shall be present at that physically at that time when he's taking that decision. That would comply with the directed and managed in UAE. That condition would be complied. Another thing is adequate number of employees in UAE. So either full-time, it should be full-time qualified employees physically present again, and they expend, or there is an option of outsourcing it. So if you're outsourcing it, the expenditure should be adequate on it. Another is incurring of adequate operating expenditure, and that should also be incurred, and you should be able to prove that such expenditure was incurred in UAE in the reports. Then physical assets in the state. Adequate physical assets should also be present in the state, and adequate expenditure on outsourcing also. So if you're not actually doing the expenditure, you can at least outsource it to a third party. So when we spoke about these number of employees, operating expenditure, or physical assets, we use the word called adequate. So the thing is that economic substance regulation has not come up with adequacy thing. It has not defined what is called adequate. So adequacy would depend on the level of your activity, or it will also depend upon the size of your entity. So it is purely subjective to the regulatory authority to decide if you are falling under this category or not, or if you are actually fulfilling this economic substance test. Then comes monitoring or outsourcing of the activities. So we have kept an option like you can outsource those activities, but in that case, there are conditions that economic substance regulation would definitely put forward, because see, it won't give you a loophole to exit out of the regulations. So you should be able to demonstrate that you are able to monitor very closely the third party entity with sufficient control. And the outsourcing would be for this core income generating activity that you have just discussed. And the reporting of adequacy of employees, expenses, and premises should be there in UAE. So that all of these conditions complying would mean that you have actually cleared the economic substance test. There are two different requirements, like how it was already explained. Like we have 9 different relevant activities, and in that we have holding company business, which requires lesser requirements to fulfill an ESR, and we have high risk intellectual property business with additional requirements. So I'll just give you a glimpse through of it. So the reduced requirement is for the holding company business, and in that definitely you have to prove the adequate employees and premises condition. That should be definitely there. And then you have to submit any document or information to relevant authority which is applicable for you as a licensee. That's it. If you comply with these two, you are actually considered as you have complied economic substance test. Then comes the intellectual property business. So intellectual property business is something little dangerous, because you have to comply with all the others, and additionally you have some few things which the regulation has put forward, and you have to comply with all of those. One thing is you should be having information that demonstrates that you have actually had a high degree of control, because definitely when it's property rights, it's patent, it's trade license, so you should be able to have a high degree of control in its development, maintenance, enhancement, or protection of intellectual property asset. And it should also have full-time employees with necessary qualification who are permanently residing in the state. Along with it, you should have a business plan that demonstrates why are you actually holding that intellectual property asset in the state. And the employee information, you should be giving extra additional information about your employees, which also should include level of your experience, the type of the contracts that you have with your employees, then qualifications and duration of employment with the licensee. Also, you have to demonstrate that decision making is actually taking place in the state. So with these two, our requirements part is getting over. Then comes the real crux of economic substance. What are we actually meant to do? That is declaration and reporting in obligations. So one thing, as a licensee, you have a responsibility to notify the regulatory authority, and you also have the responsibility to report. So these are the two main things that we have as in our hands. And one thing I would like to say about this notification, because the due date is nearing and we are all looking forward to it. So notification and reporting, both of this is not happening for the 2020 year. It's actually for 2019 year that is being, the due date is being extended and put to June 2020. So the financial year is actually over, and for the year that is over, you are actually making the notification right now. So I'll just give you a glimpse through what are the contents of the notification, or what are the things that you will have to present to the relevant authority. One thing is in the notification, whether or not it carries out a relevant activity, you have to mention that. And if there is any part of your income that is being subject to tax in a jurisdiction that's outside UAE, so you have to mention that. Then the date, of the end of the financial year. That also we have to mention in the notification obligation. And the detailed report that becomes due after 12 months of your completion of your financial year. That is a detailed one. You will have to explain things, and definitely it's based on this report that regulatory authority will decide whether you are complying with the economic substance test or not. So the type of relevant activity carried out, you'll have to mention the type of relevant income that is being earned. Then you will have to mention the type of operating expenses and assets that's there with you. Then the location of the business, and it's definitely based on these information that your adequacy would be tested. Then information showing the core income generating activity. Then you will have to make a self declaration whether you have complied economic substance test. Then if you have outsourced, like I've said, there are some additional requirements that would come. So definitely you will have to explain that. And then for IP activity, additional requirements, that is also just now explained, all that will come in the reporting requirements. So for ease of understanding, I've just tried to have a due date at a glance. So definitely 30th June 2020 is one of the most awaited date for notification. And though we have DIFC and DAFSA with a different date. So another thing I would like to say, sometimes we get questions from a different perspective. And the perspective is like, what if we don't comply with this? Or what if we did not know this? Or what if this notification was not filed? And that's okay, because sometimes our mind works in the reverse order. So the consequences, penalties. So the penalties we have different categories for penalties. So that calls for retention and failure to notify. Once you're failing to notify, that means filing the notification, the penalty would range from 10K to 50K. Another thing is failure to provide accurate or complete information. So you're providing the information, but it's not complete, but it's not accurate. In that case, again, we have a 10K to 50K range. And also you would be deemed to fail that economic substance test, which is huge. Now let's come to the next part, which is actually explaining on failure to demonstrate economic substance, what is the penalty that would be attracted. First one, they have divided first failure and consecutive failure. So first failure, it's attracting a 10K to 50K. Along with it, an information exchange with the competent authority, where your parent company, your ultimate parent company, your ultimate beneficial owner is located. That calls for an attention, because your information is going to fly wide. Now coming to the consecutive failure, which would definitely be a higher one. Penalty of 100K to 300K plus this information exchange. Along with it, we have a provision where your trade license or your commercial license would be suspended or withdrawn or not even renewed. Now that is really, really important. And one other thing I would like to bring your attention to is 2019 financial year is over, and you are going to file the notification and report for the first year now, that is 2020, you're filing for 2019. So if unfortunately there has been failure, your first failure provision would get lapsed with that. So now in 2020, which is the year you actually have in your hand, where you actually have to make sure that your substance requirement would be fulfilled in the next year. And if you do not do that at this point of time, next year on failure to notifying or on failure to demonstrating financial economic substance, it would attract the consecutive failure. That means the huge one. So definitely, if you are well equipped, if you are timely addressing the issue, you wouldn't have to bother about this provision of economic substance regulation. That is the penalties part. Now, what is the need of the hour? That is what you should be discussing or thinking about at this point of time. One thing is analysis of activity in detail beyond the trade license. Definitely, it's not the economic substance regulation or the relevant regulatory authority is not going to focus on your license or what is activity that is mentioned there. What are you carrying on commercially? No. People are going to go beyond your substance, beyond your, beyond your license, and then do an analysis. So this is the right time to do the right activity, right analysis, to undertake a multi-fold impact analysis of how your business would be affected by this new regulation, and analysis of the requirement to notify your report. There are going to be cases where you would have to report, where you would have to notify, but the report wouldn't become liable to you. So that analysis should happen right at this moment of time. Then you have to carry on the readiness assessment. That means your entity should be well equipped by this time. And then if you need obtaining assistance for tax, that should also be done at this point of time. So in a nutshell, I would say that having a new regulation doesn't mean it's a new fear. It's actually a new call to equip yourself for the new requirement. So on that note, thank you. I would like to call Shahana. Take over.
Thank you so much, Nabila. It was nice hearing you. We have been receiving a lot of questions through emails and webinars. So we have collected and compiled these questions, and this will be answered by our two speakers. So I'll be going on with the first question. And should you have any questions, you can put up your questions in the Q&A tab, and then we'll be answering those. Okay, so for the first question, it's from CA Lipika Jain. She's asking that most type of entities are falling in ESR category. What if it is just a representative office? Is it required to comply with the ESR?
Yeah, yes, Ishana, as I explained in my presentation, the thing is that irrespective of the form of your incorporation, whether you're a representative office, you're a branch, you're an LLC, you are a partnership, whatever, respective of the form, yes, you are under the ambit of economic substance regulation.
Okay, so second question is from Ruba Basim. She is asking, do offshore entities fall under ESR?
Yeah, yes. Again, as I've detailed in my presentation, yes, even the offshore entities are under the ambit of ESR.
Okay. The third question is from Samar Osmani. He is asking, law say director should sit in UAE. So the director should be a resident of UAE?
The law is actually, so I'll take up. So the law is actually wanting the directors to be physically present in the state when the activities being carried out or when the meeting is there. And it's not stressing on the residence requirement. So it's actually physically being present, and the quorum of the directors also should be present for a valid directed and managed condition to fulfill. Yeah.
Okay, so the next question is, do you think this will encourage more companies to outsource some of their routine functions? What do you recommend? It's from CS Ruchismita Rai.
Yes, Shannon, it's not just about outsourcing. Even if you outsource, the control and management is the key here. So what I think is that at some time, if you outsource to a key business partner, that also will be a more validation in terms of a substance. So again, even if you outsource, I'm not someone to judge what's going to happen in the future. But again, even outsourcing would be considers meeting the substance requirement, subject to the control and management is within the entity. Yeah.
Okay, so the next question is, how do we determine the relevant activities? Do the relevant activities listed under commercial license determine whether a licensee undertakes a relevant activity? It's from Ibrahim Sheikh.
Again, it's already been discussed in the presentation. that we need to see the substance of the form. We need to do a multi-level analysis, and even though whatever the activities being mentioned in the trade license or the permit, you need to see, analyze each and every transactions, and see, like even for the lease finance, even if you provide that to a foreign connected or a connected person, the entity, you are in the ambit of ESR. So it's not just what's there in the trade license. You need to go dig into detail.
Okay, for the next one, it's Akanksha Sharma. She's asking, what if my company undertakes a relevant activity, but it does not earn any income from that activity during that financial period?
Okay, Shana, that's very valid question, and that's kind of question which we receive a lot. What we have to do is, you may have to do an assessment on submitting the economic substance regulation, the notification. If you do not earn the income, you may not need to submit the report, but you have to see, check with your regulatory authority, and mostly you have to submit the ESR notification.
Okay, so the next question is from Zubair Ahmed. He is asking, do employees who perform core income generating activities need to be residents in the UAE?
Yeah. In principle, it's actually wanted that your employees are resident in UAE. But in case you're not doing that, or your employees are not resident, there are two conditions. If you have fulfilled, then it would be considered fine. So one thing is that they should be physically present when they're carrying on the activity. And the other thing is that licensee should incur the right amount of expenditure on those employees during that time in the state. So if that is complied, then definitely it's okay if your employees is not resident. But in principle, it's actually wanting that your employees are resident.
Okay, so this one, next question is from Suyash Agarwal. Do the regulations only apply to UAE entities that are part of a foreign multinational group?
No, definitely. See, that's kind of notion we all have when economic substance regulations, but it's applicable to all the licensing, those who are conducting relevant activity. So, yeah.
Okay, so the next question is from Abdul Hamid. He's asking, is lending business to another group entity considered a lease finance business?
Yeah, of course. See, it's considered as a lease finance business as long as you generate an income from that. And the income need not to be just in terms of the interest. It can be a management fee, whatever you call it, whatever you get as a consideration. Yes, in that case, yes.
Okay, so the next question is from Abhilasha Singh. She is asking, since COVID-19, our directors are not able to travel to UAE. How can we demonstrate substance?
So that's a very relevant question at this point of time, because very recently Ministry of Finance has come up with an advisory that they're actually giving a little flexibility in compliance with the economic substance regulations that is required, and that cannot be fulfilled because of the social distancing that we have to maintain because of COVID-19. So they have actually allowed little bit of that freedom deciding that your economic substance, and that's actually for the directed and managed condition, because in there they are asking us to be physically present in the state, and that cannot be possible during this social distancing measures. So in that perspective, very temporarily, and for this year 2020 year alone, they have allowed that kind of a that kind of a freedom, but definitely not for 2019, for which we are going to do for the notification would be filed now. It's for 2020. Yeah.
Okay. I just wanted to add that it's a very valid point, but one more thing is that you also, as per the advisory, you also have to consider appointing an alternative director if it's relevant to overcome this practical implication. That's also been advised by the ministry. So we also need to explore that option if the COVID-19 is having such impact for 2020, as Nabila said, rightly said. Yeah. Next question.
Okay, so next question is from Suresh. The question is there any indication how detailed report will be required to be filed at the end of the 12 months from financial year for more clarity?
Okay, so yeah, maybe Nabila has explained what from our experience from other jurisdictions, what can be the content on the economic substance report. The notification template has been already been published by the ministry and various regulatory authorities. So what we see is like from the experience of Bahrain, it's going to be a very detailed report. So we are looking forward, and that's not yet published. So we are keenly waiting. As on the content, but it's going to be more or less on what Nabila had shared earlier.
Okay, so the next question is from Mohammed Rizwan. He's asking, will ESR be applicable if we purchase from a foreign related party and selling to outside UAE, but the goods are transferred directly from outside UAE to outside UAE? Goods are not coming to UAE.
Yeah, that's that's really interesting. Because that's a principle of economic substance regulation. You're shifting the profit, and you're doing like you're purchasing from a foreign connected person. That good is not coming to the UAE, but you're directly selling to outside the country. So that's the whole purpose of economic substance regulations. But one thing I wanted to say in this is that when we look at one unique thing, what I've noted in the economic substance regulation of UAE is that it is mentioned that the goods should have been imported in UAE. So I think that's not there in the similar jurisdictions of like Cayman or PVI, where the condition is not there. So I'm expecting some clarity on that. But other than that, if it's definitely bought from a connected person from the foreign jurisdiction and so directly sold to a third party, the ESR should be applicable in principle.
Okay, sir. We have one more question. When you say you need to look beyond your trade license, how would regulators know that we are doing something out of license? Actually, then this is the violation of license when it goes beyond license, right? This is from Mohammed VM.
Yeah, that's that's a kind of practice I've seen a lot here in UAE. Whatever is mentioned in trade license need not be exactly the activity you undertake as a business. So yes, there is some legal concerns over there. You have to address that. Earlier, you just have one or two activities in the trade license and you do many things. No, that's not possible. That's the change which I wanted to emphasize in this session, where I'd spend more time why this is happening rather than what's happening. There is a huge change that's coming, the tremendous change. We need to appreciate that, and that the compliance and ensuring that you're doing the business in a proper channel, and all the permission from the related regulatory authority is mandatory. Definitely that's going to be a challenge here in UAE, and then every business you need to assess the risk and do the needful. Yes, there is a legal risk. I would definitely say yes.
Sure, sir. Thank you. Those are all the questions for today.
Thank you. I just wanted to add that we know that we really appreciate the time. We really know that the time has exceeded, but we wanted to take as many questions as possible. That's why we have extended our time. Thank you all attendees for participating. And yes, over to you, Shanam. Yeah. Thank you.
Thank you so much all for your participation. We appreciate having you all. With this, we end our session. You can contact us. Our details are given. Thank you so much. With this, we'll end.
Thank you all. Thank you.
Thank you.